All right, guys, I appreciate you guys for being here again and welcome back to the Beginner Day Trading YouTube channel. I really appreciate you guys for tuning in. Please hit that thumbs up so we can continue to grow the channel. I would appreciate it. Now, today's topic is day trading basics, essential concepts for beginners. So, these are things that you guys are going to need to know in order to prepare yourself to higher heights as it pertains to day trading. And without further ado, let's go ahead and get straight into this video. So for our illustration purposes today, we are going to be utilizing Robinhood. And Robinhood is one of the easiest platforms you can use in order to invest or trade stocks. And so we're going to be using that, but let's go ahead and look into what I need to tell you for today. So in simple terms, we're going to talk about what is day trading, and we're going to expand on that, and then we're going to do illustrations in Robinhood, okay? So if you guys want a free stock, please click on my Robinhood link that's in the description. Now, let's talk about what is day trading. Very, very important. Now, day trading is buying and selling financial instruments within the same trading day. Okay. So you'll also hear terms like swing trading, long-term holds. You'll hear momentum trading, and you'll probably hear more terms. But simply put, day trading is simply getting in and out the same day. Now, the objective of day trading, for a lot of you that don't know, a lot of you hear about it, but you don't understand what the objective is. So it's to capitalize on small price movements through quick trades. Okay. And one of the most popular ways and safest ways, in my opinion, is going to be called scalp trading. And we'll get into that a little bit later. So put that on your list of things to talk about. Number two, understanding market hours, very important too, because some stocks and ETLs you can buy 24 hours depending on what brokerage you're in. If you're using something like a Robinhood, a lot of the most popular stocks are available, especially in the tech sector, for trading 24 hours. Now, it's important to know this. Maybe if you're in a WeBull or MooMoo, you may not be able to trade certain stocks that you may like 24 hours. So that's very important. Now, the stock market hours are 9:30 a.m. to 4 p.m. Eastern time, and this includes pre-market and after-market hours. Okay. Now, the pre-market and after hours is going to depend on what brokerage you use. If you're not using Robinhood, you may have to have a certain amount of capital in your account in order for you to be able to trade. Okay, so keep that in mind. Now, the 4X market hours are 24/5 with sessions for major financial hubs. Okay, very important to know. Number three, key concepts in day trading: liquidity. I'm sorry, ability to buy, sell quickly without affecting price. Very important. Volatility, degree of price variation over time. And then you have volume, number of shares, contracts traded. All of this is going to be very important. So, in order for your trades to be impactful, this liquidity, you're going to have the money to do it, and then there's going to have to be liquidity in the market. So sometimes you'll hear people talking about penny stocks, and a lot of times penny stocks do not have enough liquidity for people to be profitable. Along with that, when you think about volatility, if there's no volatility, if a stock is not moving, it's going to be hard to trade. Now, there are advanced ways of making money when a market does not move, such as an iron condor, which you would have to have a margin account for most brokerages, and that may come with limitations, but we'll talk about that in later videos. And then you're going to need volume, right? Very important. Number four, popular day trading strategies, which we kind of spoke about: scalping, numerous trades for small price movement. So a lot of people that have large amounts of capital are scalp traders. I mean, even if you got a couple $1,000s, there are people known to make, 10, 15, $20 a day by just trading stocks. Now, some of these people, when they trade options, they're able to 10x their profits, but it's always more important to understand the concept of trading, and that's by starting off with trading stocks. When you're going into options, there's other things you have to factor into it, like delta, theta, which we kind of spoke about in the first video, but we'll expand on that. Why not now? Now, delta, when it comes to stock option trading, is the the number you can make or lose as it pertains to a stock moving $1. So, for example, if you're doing a call in the SPY and you have a theta of 0.50, that means for every dollar it goes up, you make 50. You make $50. For every dollar it goes down, you're losing $50. And then when we talk about theta, for example, you may have a theta for 0.002, essentially meaning that because this option does have value, each day you hold on to it, by default, you can lose less than 2 cents or less than a penny, I'm sorry, for every day that you're holding on to that particular option. And that's theta, time decay. Now, as we talk about momentum trading, this is when you'll see traders do something like this. So they have a graph, right? And they'll put a line right where you see there's a dip, a spike, I'm sorry, here. They'll put a line across. And as soon as, for example, on their chart, the price starts to go above, then they'll put a call in or they'll buy a stock in hopes that the stock will ride up. But then what will happen, and we'll talk about this a little bit more, is they'll put a stop loss on. Okay. So they'll put a stop loss on basically to set it up to where they won't lose more than they're willing to lose, if that makes sense. So if I get into a call for $100 and I say, you know what, I don't want to lose more than $20, so I'll set myself up in a way where the most I can lose is $20. Okay, so that's very important to understand. Now, let's go back to what we need to talk about here. Breakout trading. This is trading when prices break key levels. So this is kind of that point where a stock has confirmed that it's breaking out above a key resistance level, and a resistance level would be kind of like we spoke about on this chart, right? So if I put a line here, right, let's say the resistance level for a breakout, the way you've seen it, is $129.15. If it goes past that, then you would buy the stock or put a call in, and then you're going to ride the momentum up. Okay. And then you've got reversal trading, betting on trend reversal. So a lot of times you'll hear a term called bearish, right? Bearish is when you think the stock is going to come down, the overall markets are down. That's bearish. Bullish is when the market is up, it's green, everything is green, the stocks are going up. So it's important to know that. Now let's talk about number 5, tools and platforms. So you've got trading platform, real-time data, fast execution, charting tools. And then you have charting software, essential for technical analysis. And that's something like this. So you can see I'm in a play right now where my average cost is $64.84. I have it set to sell at 65 because I think it's going to do that. But you use your tools like this if you want to do a trend line, or you just want to put a quick horizontal line. As if when we spoke about those breakout lines, this is what we would call a key level of resistance. And so you utilize your tools up here. If you need to put notes in here, then you can do something like the text, put it here. All right. And then you can say something like resistance as a note. So resistance, and then you'll need to know where support is as well. So there's different ways you can utilize these tools to your needing. So again, take note of that: resistance and then support. Resistance, support. Remember that. And if you need to, do a little bit of research there. Okay. Now, Let's go ahead and come back here. News feeds. Always stay up to date with the news. So I like to use CNBC. Some people may like to use Apple News. Some people may like, let me think, Yahoo Finance. Some people may, I don't know, you could use the news that pops up on your brokerage app like Robinhood. You've got WeBull, Ameritrade. The names go on and on. So even your brokerages have news tabs in them, and you can utilize the news and see what's going on. Next, risk management. So this is one of the most important aspects of trading because, as I mentioned before, when you're coming up with your plan for the day, you should have a number that you're not willing to lose. So, for example, if it's $25 for the day, if that's too much, then you say, you know what, I'm going to do $20 that I'm willing to lose for the day. And so you want to use your stop loss. Okay. So this is going to limit your potential losses, positioning size. So you hear this term called over leveraging. And that essentially means is you're putting too much money in at one time, which could ultimately increase the amount of losses you have for the day, especially if you're going to, whether you're buying stock or playing options, right? So a lot of people will get into leverage ETFs, and I'm a person that trades leverage ETFs, but I do small percentages at a time. I mean, very small. Like the max I'll do, let's say if I have a brokerage that has $20,000 in it, I may only use $300 to $400 of it per trade, okay, or maybe even less sometimes. Sometimes I may do 1%, depending on what kind of day it is and how I'm feeling as it pertains to risk tolerance. Now, okay, now you also have a risk reward ratio, so seek trades with higher potential profit than loss. And a lot of times that's going to come with just putting small amounts of capital at a time. So the bigger, the more risk you play, the more you can lose. The smaller the risk, the small bits of capital you can gain at a time. And there's nothing wrong with that. For me, if I get $5, I'm good with that. If I make $1, I'm good with that. If it's a $200, $1,000, I'm good with all of that. As long as it's not red, I would consider that a good day. Now let's talk about psychology of day trading. And a lot of this gets people in trouble, right? Um, it can get to the point for some people where it can mess up their family budget, their family fortune, things they have set up. And so you're gonna have to be disciplined. Stick to your trading plan. Do not allow your emotions to take over. Okay. Emotional management. Avoid emotional trading. So you'll see instances where someone will lose $1,000 and then they get emotional and then they do what they call revenge trading. And so with revenge trading, you're trying to get back at the market for taking the money, but then you get yourself in a trap and you lose even more money than you did before because you were emotional. You didn't have a game plan of how you were going to accumulate those losses effectively. And now you're out of even more money. And now you're saying you don't want to trade anymore. And this is why you guys need to stick with me on this channel. I'm going to take you through each step of the way. So stick with me. Consistency. Focus on small, consistent gains. Okay. Now, over the last 4 to 5 weeks, I've just been scalp trading in one of my accounts. And I would say in that particular account, I will average like $10 a day, which is fine, right? Because I take that $10 every day and then I put it back in something like an Apple or a VOO or VTI. Okay. And so you take those small amounts and you can reallocate them into a bigger portfolio. And over time, you'll notice those small little bits of capital that you'll gain will add up. Okay. legal and tax considerations. So this is very important. Pattern day trading rule, which is $25,000 minimum balance for frequent day trading. Now, this pertains to those of you that are going to be using a margin account. So if you're going to be trading in a margin account, then you're going to have $25,000 in there if you want to go willy nilly with your day trading, meaning have whatever amount of trades you want. Otherwise, the other way around that is to have a cash account, meaning you're only trading the money that you actually have. When you have a margin account, you can trade more than what you have, and that can get you in a bigger hole because guess what? If you're borrowing money and you lose it, you're going to owe somebody money. And as a beginner, that's something you want to stay away from. Taxes. Day trading profits usually tax as short-term capital gains, which is true. So if you're a person that's buy and hold, you're going to be taxed less, especially if you hold your stocks, I want to say 3 years or longer. I think you're only taxed at a rate of like 15 to 20%. I can't remember which one. But if you're day trading, it could be I want to say 30 to 40%. Not I can't remember the exact numbers, but there's a major difference between trading and actually investing, buying and hold. Now, day trading requires market understanding, strategy, discipline, and a calm mindset. Start small and refine your approach as you gain experience. Okay. Now let's come back to Robinhood. So this is an account that I have for another YouTube channel where we invest $15 per day, and so I have it set to automatically come out of my account. But one of the things I wanted to go over with you guys is the different options they have, right? So a limit order essentially is you is your how is you buying a stock. Okay. So you have limit orders, and then there's also in some brokerages, there'll be a market order. So a limit order is a price that you set. So for example, if Nvidia right now you see it sitting at 124, and I say, you know what, I want to buy Nvidia at $124.70. If I can type this in correctly. Okay. And so essentially, I'm trying to put it in here. Sorry, guys. Let me put this in 470. I can't type today. Well, my screen is freezing up. But this is how this works, okay? So if I say I want to buy Nvidia at 124, if Nvidia comes down to $124.70, and let's say, for example, I want to buy one share, or if I don't want to buy a full share, let's say I want to buy half a share, right? So you would put well, you could do, let me change this up. But anyway, for this example, let's say I want to do one share, right? If it came down to 124.70, I get to buy in, but if it never does, I don't get to buy in. Now, another way you could do this is you can change it from shares to, if I go to buy order, okay, you can change it to dollars. So if you only want to put $10 worth in, you can do $10, okay? If you want to do a stop loss order, and say you're already in this thing, right? And you say, you know what? I want to be stopped out at $122 because I'm not willing to lose more than that. Then you would set it up there. Now, as we come to a stop limit order, when you're dealing with stocks like Tesla, they move very fast. So you may need to use a stop limit order because it's going to give you a range. So if Tesla, for example, was at $124, right? And it's moving fast, it's very volatile. And I say, you know what? I'm not willing to lose more than $4. But if I can't get stopped out at $120, meaning my position won't be sold at $120, then I may have to range it to like $118. And somewhere in between there, you will be able to get out of the position and be executed efficiently, because you're coming to find out sometimes when these stocks are volatile, you could potentially lose out on some money because some of the brokerages won't trigger those stop losses if the stocks are moving too fast. Okay. Now, trailing stop loss basically is if a stock is, let's say you have a stop loss on it and then it continues to go up. As it goes up, that percentage trail goes up, right? So if you say I'm only willing to lose 10%, you'll notice that trail will start to go up as the stock is going up. But that's a little bit more advanced, and I'll take time to explain that more in a later date. So reoccurring investment. Okay, you can say, you know what, I want to put $5 per day in this thing. So if you do five, okay, and then you say every single day, well, you could do every once a week on a Thursday, every 2 weeks on a Thursday, every month on the 22nd. And so if you want to do every day, every trading day, you can do that. And then you would do review order, and then you're going to be executed. Okay. So another thing I want to show you guys on this Robinhood platform, for example, is you get to see what's going on, right? So if you want to know what's going on from the insiders of a company and what they're doing, for example, you'll get to see if someone's buying or selling. And so we can see NVIDIA's CEO, it looks like he sold 240,000 shares on August the 12th. And look how much money he cashed out on. Okay. So that's something you can take a look at. If you want to see more, you can do see all. Another thing that you'll find useful is the earnings dates, right? So you can see they have their next earnings on August the 28th, which is going to be after hours. And then you can see for every previous earnings if they actually beat or they actually lost on their earnings per share. And it looks like the last few they've beat, and then you see one that met pretty much at expectation. So all of this is really good to know. Okay. And then if you're more interested in knowing things in more depth, you have market cap, you've got the PE ratio, you got the dividend percentage, and then you can see the average volume. So this number here is how many trades per day is average for this particular stock. And so you'll see why a lot of people like to trade NVIDIA, because you're not going to see another stock that trades this much. Now, I would say second to this might be something like a Tesla. And then at certain points, you'll see something like a Neo or something. And Neo is another automotive company out of China, but their stock isn't particularly doing well right now. But that's a story for another day. Okay. So overall, guys, in a nutshell, these are pretty much the basics when it comes to day trading. And if you guys have any questions for me, feel free to let me know in the comments. I'll be checking them out. If you want that free share of Robinhood or WeBull, you can get a gang of shares or a gang of shares from MooMoo. Make sure you guys click on those descriptions and the link I have. And I appreciate you guys, and I'm out. Peace.